Okay, you use the allowance methods. So allowance methods is like indirect method, you know. So there are two advantage to the allowance method. Two advantages if you implement allowance method instead of direct write-off method. First one, it records estimated bad debts expense in the period when the related sales are recorded. Okay, you use the estimation. You don't like determine 100%. If you determine means you should use the direct write-off method, right? But if you just estimate, if you just make estimation, so you're gonna use allowance method. Second one, it reports account receivable on the statement of financial position at the estimated amount of cash to be collected. Okay. How we record bad debt expense using the the allowance method. So let's see this example. Techcom had credit sales of 300,000 during its first year of operation. At the end of the first year, $20,000 of credit sales remained uncollected. Based on the experience of similar business, Techcom estimated that 1,500 of its account receivable would be uncollectible. Okay, so the company has 300,000 of credit sales, but at the end of the year, 20,000 remain uncollected. Okay, so maybe it like already passed the deadline, but customer still not pay their debt. But from this number, $105,000, you estimate that for this number you cannot collect. Okay, you estimate that. How you gonna record? You will record bad debt expense on debit and allowance for doubtful account on the credit side. Okay, for $1,500 to record estimated bad debts. Okay, do not forget. I remind you, once you make journal entries, you have to update your ledger or T account. Okay, let's see the effect of in the balance sheet of your account receivable. Okay, account receivable here and less allowance for doubtful accounts, and this is your net account receivable. Account receivable net. Writing off a bad debt. And then Techcom decides that JCAN's 520 account is uncollectible. Okay, so how are you gonna record? You will record allowance for doubtful accounts 520 and account receivable JCAN 520. Okay, before this in the in this slide, yeah, I will copy this slide. Okay, so on December 31st, you record that on this date you estimate that you cannot collect 1,500. Okay, so for this one you record bad debt expense on debit and then allowance for doubtful accounts. Allowance for doubtful account AFDA 1,500. Okay, from this number at this date, yeah, at the next month, from this number you decide it is uncollectible. Determine like already 100%. You are already sure. Okay, so you will record allowance for doubtful accounts on debit. Okay, this is credit, right? You move to debit, and you record account receivable on credit because this one you already sure that you cannot collect it. So you remove the account receivable of JCAN. Okay, 520,000. After you record, update your ledger. Okay, The write-off does not affect the realizable value of account receivable. Okay. Writing off a bad debt, you write them off or not. So meaning that whether you use direct method or allowance method is the same. The net realizable value of your account receivable are the same. Okay. This one, recovering a bad debt. To help restore credit standing, a customer sometimes volunteers to pay all or part of the amount owed on an account even after it has been written off. So even though you already written off the account receivable, sometimes that bad customer in the future comes to your company and said, hey, I'm gonna pay back you. I'm sorry for the for last 2 years, something like that. Okay, so so for this kind of scenario, on March 11, Kent pays in full his 520 account previously written off. So how you gonna record? Firstly, you recall back the account receivable. You will record account receivable on debit and allowance for doubtful accounts. Okay. Remember, you record allowance for doubtful accounts for recalling back the account receivable, because this one because previously you record when you write off the bad debt of J account, you use the allowance method, right? That's why allowance for doubtful accounts on debit and account receivable on credit. So when suddenly J comes to your company and say they're gonna pay you back, so you need to recall, right, the account receivable. When you recall them, you just change the position. Okay. Account receivable on debit and allowance for doubtful account on credit. 520 and 520. And the next March 11, on the same day, you record the collection of the money for 520. Okay.